I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. He's speaking to us from Superior, Colorado. Rick, I've seen kind of a pattern in the U.S. stock market the last couple of weeks where the Dow Industrials are down, but the S&P and the NASDAQ are up. What's happening there?
Well, it seems like there's infinite number of ways to rotate all this money that's got to find a safe harbor somewhere. And, I've been, perma-bearish forever, but I've got higher targets, certainly for the S&P 500. That's the index that I track most closely. And I'm going to target somewhere up around 2313 most immediately, which would be about a Dow 600-point rally. So if one goes, the other will follow. But I have to say that we've had this long, couple weeks of consolidation, just really boring market action, and culminating, or I'm not sure if that's the right word, but we've had the futures take a little bit of a dive. And you think, this is it, the market's finally responding to the fact that U.S. corporate earnings have been down for now 4 straight quarters. Nothing seems to phase this market, however, and I think you get in trouble when you try to forecast it based on what's going on in the real world. So I just kind of stick with the charts.
Has the biggest problem for U.S. corporate profits been the high U.S. dollar?
Well, that's certainly a problem for the multinationals. And there's no getting around it. The dollar is not only a safe haven, but it's really the currency of choice for all the big players out there who want as much leverage as they can get for a single unit of currency. So even though over time we've had all this talk about China and Russia getting together to kill the hegemony of the dollar, it's not going to happen. That's where the game is played, and of course there's no currency big enough to take the dollar's place. So the companies, but obviously they're also under a lot of deflationary pressure, because anything that any company makes these days is pretty much in a global market. So we've got the deflationary forces acting on companies, and they've also wrung out as much in the way of efficiency as they could possibly have done over the last 4 or 5 years. So they're just kind of up against a wall, really, and none of them wants to expand production, so they're all shrinking their capacity and reducing employment. Of course, that's taking place not only in manufacturing, but very, very heavily in the banking business.
Yes, Barclays Bank laid off 3,000 people, blaming Brexit. But I think Brexit is going to be the boogeyman that everybody blames for anything that goes wrong over the next year.
It's hard to see Brexit producing anything but benefits. I think the simplest idea that Britain could go off on its own and cut its own deals and do just fine without being encumbered by a fat layer of bureaucracy in Belgium. So I see Brexit in purely economic terms as win-win, except for the EU itself.
The British pound today plummeted after Britain announced a cut in its key interest rate, and it looks like they've run up some kind of quantitative easing as well.
Well, you get the idea that easing has kind of run its course, that we're not really getting much benefit from easing wherever it's going on, except to the extent that stocks tend to go higher, and sovereign debt gets even more pumped. But in terms of economic growth, we're not not getting much bang. British pound currently trading about $1.31. It broke through a target that I had down around, let's see here, about $1.30 and change. So that means that it's going to head even lower. And I've got a $1.08 target that I hung out quite a while ago that's still live.
Well, of course, too, because they have their own currency. If the value goes down, tourism is perhaps Britain's biggest industry. Lower pound means more people checking out Russell Square in London.
Right. If it keeps coming down, I may go there myself and get me one of those Savile Row suits, which I haven't been able to afford for the last 20 years.
Well, Oxford Street sounds like it's named after a shoe, and it is. It's a great place to go shoe shopping, and I admit I've done it there. And the last time I was in Britain, it was $1.72 Canadian, and the pound is around $1.70 right now. I'm not saying that's an accurate thing, but it's around that mark, which makes it affordable for Canadians to visit London as well.
Well, it's nice to go shopping there. They certainly make some of the best consumer goods in the world, and with the pound, it's $1.31 US right now, which makes it, as you say, very attractive to travel there and do some buying.
Is this an opportunity for people to buy other currencies versus the pound?
I think they're all going to sink relative to the dollar, excepting the yen. You know, there was such a lot of hubris attending the Japan Central Bank of Japan's latest monetary blowout, and it seemed like there was such a heavy bet against the yen that you can only see it going higher, which it's doing. The Japanese are kind of in the same position as the Swiss. They've got a reputation as having a great currency to do carry trades and everything else, and as much as Japan would like to hold the yen down, it's currently trading, let's see, 0.99 off we've had a major rally in 2016 to 1.02, so we're really, yen is about to take out the old highs, and that's despite the best efforts of the central bank to keep the yen down to help Japan's export economy.
Well, my correspondent in Japan, James Corbett, was telling me they expected nearly a $200 billion stimulus program. It was closer to $100 million, and people were so disappointed that it had the effect of doing the exact opposite of what the government wanted.
Yeah, they can't seem to win. Japan has been in a protracted deflation, and the only reason they haven't had a deflationary collapse is that over the 20 years of deflation, they've had a relatively strong global market to export into. But, of course, the competition from Asia has been really tough, and Japan, at this point, whatever they do in terms of monetization and loosening, it's going to be thwarted by the deflationary impact of demographics. They're not producing enough workers to support the ones who have retired.
Yes, James Corbett telling me that the sale of adult diapers has now surpassed the sale of infant diapers.
That's a terrible statistic. That's one I hadn't heard really, but I guess it's another way of looking at Japan's problem.
And of course, in Japan, immigration is not an option. They don't like foreigners. No,
they don't. I mean, it worked to their advantage for a while because it's nice when you're not having to train, indoctrinate, assimilate an outside labor force, and Japan has gotten around that through, well, they built factories elsewhere, and of course they've done well with car sales in the U.S. Germany, I guess, used Japan as a model because Germany, for one, it's very tough to get around labor rules there, but they've managed to produce enough cars offshore to offset the competitive disadvantage of having to export them.
Yes, and the robots are coming and have come. In China, something like 1 million Adidas workers have been laid off, and they will be replaced by robots making sneakers in Germany.
That's a pretty big deal. You know, I don't know actually what has happened to bring that about, but when you talk about Nike in China, it's a factory town with tens of thousands of workers in some cases, and I'm not sure where they all go when the factory closes down. The migration has been kind of one way from Japanese rural areas and farms to these manufacturing centers and the cities, and there's no way to reverse it really, because the whole a lot of the farms that these workers left have been taken over by bigger companies. So you've got the agribusiness in China like never before, and when you have just a little bit of a shift in China, it's a pretty big deal in terms of the number of workers that it involves.
And of course, we never hear in the popular media about the riots in China when layoffs do happen or people can't find jobs. And the Chinese government, in some cases, even admits that's happened. But really, they're worried about their jobs disappearing to countries like Vietnam or Cambodia.
Yeah, that's no matter what you produce and how cheaply you produce it, there's always someone breathing down your neck. You know, the U.S. had Korea and Brazil to worry about as far as auto production, but before you know it, they're producing cars in places that even North Korea is worried about. But we don't. You mentioned we don't read too much about that, and it's a big advantage of the Chinese government to be able to close the circle there of that not much news gets out of China that they don't want the rest of the world to hear about.
Well, at least now in China, I have friends who work for the Chinese media. They do report plane crashes. They never used to report accidents at all. But now that everybody's got a camera in their phone, whether you go and allow that into the mainstream media or not, it gets out. So why not admit it happened?
Well, that's global. Everybody's got a cell phone and a camera, and it's definitely hard to keep secrets these days.
Rick, you were just telling me off air that there is concern about the bond market. Is it strong right now or risky?
I think it's the best investment around. The logic is that bonds have come, the long term has come from 1981 high of around 15% down to recent lows of about 2.1% on a 30-year. And it's logical to think, how much lower can these things go? But the fact is they can go considerably lower. And in the case of the 10-year note, I could see that getting down close to zero. So the one nice thing about the bet is that everybody in the world is on the wrong side of it. And just the unwind when there's going to be a capitulation of all those guys. And I think it's going to give bonds a final pop with prices going inverse to yields, with the long-term bond coming down from recent lows at 2.1% or so to 1.64%. You're talking about a capital gains on the order of 20% per year if it were to happen over the next 18 months or so.
We'll have more with Rick Ackerman right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Rick Ackerman. Rick, what's your take on crude oil right now? A little bit of a bounce today after declining values. It seems to be stuck around $40.
Well, I was tracking NYMEX crude futures on a daily basis, and did so up to the high in the low 50s. I think the top for the August contract was about $52 and change. But I think the last time we talked, I mentioned that I thought that the top was in, that crude could fluctuate over a pretty wide range in the years ahead, and we're on the down slope right now that I think will take it eventually into the low 30s, if not even somewhat lower. And the problem with the crude story was that the powers that be were trying to drive crude higher with a supply side picture. So there were always these threats to supply. Nigeria was going to reduce its output, or Venezuela was going to totally shut down production, and that was going to put a crimp in supplies. But the reality keeps encroaching on that story in the form of these days we don't even know where the oil is. A lot of countries that produce oil do not provide reliable statistics for reliable inventory statistics. So we don't know which super tankers are empty or which ones are sitting there filled with seawater, and no one can even estimate supply. So when you get this story that comes along about every 10 days that is trying to drum up support for the price of crude, it comes flat up against some more realistic story that suggests that there's plenty of oil around.
Well, plenty of oil. The Fort McMurray fires cut oil production by about 1 million barrels a day for, I think, about 3 weeks, and that did see prices go up in the interior of British Columbia. Some service stations ran out of gasoline. But overall, there is a lot of oil in the world, and Saudi Arabia and Russia seem to produce more oil every month than they did the month before.
Yeah, and it's I think going to continue to weigh on crude. I've got the NYMEX August crude contract targeted on $41.36 right now, currently trading $44.94. So percentage-wise, you've got a 7 or 8% move to come to the downside, and I don't think it'll be over with that. But if I were trading crude right now, I definitely have a bearish bias.
What's the outlook for the U.S. dollar? We were talking about currencies before.
I'm bullish till the end of time on the dollar. What I just mentioned earlier in our conversation today, that it's really the currency of choice for all the big players. So as much as countries, our political foes, have a compelling reason to take the world off the dollar standard or to somehow manipulate it to their own ends, it's not going to happen. It's the only currency large enough to support a quadrillion-dollar shell game, which is what you've got. So more and more money will. The dollar is more or less permanently buoyant because it is the currency of choice for the banking shell game. But also, I think more and more it will be the currency that, relative to all the others, seems to have the best chance to hold its own or appreciate. So I see nothing but strength for the dollar. It's been kind of hanging out. The dollar index is currently around 95.72, and we've had a sideways move in the dollar since last March of 2015. The dollar index topped around just above 100 there, and since then, over the let's see, it would be 17 months or so, it's gone sideways with a low over that period down around 93 or so. So it's been range trading for so long, but the whole thing really looks like a consolidation, and I don't have any doubt that the dollar index is eventually going to run up above 100. My long-term target is up around 120, where we had some key generational dollar highs, and we'll get back there again, I think.
Why have so many people said the U.S. dollar is about to crash? I mean, we keep hearing these predictions over and over again, and yet no sign of it.
Well, at the fundamental level, if you were looking at the dollar logically, there's nothing behind it except debt, of course. The problem is that when you compare it to all the other currencies, the currencies to some extent are always proxies for the underlying economy. The Japanese, Canadian dollar, for one, is a resource-based economy, and if commodities are going great guns, then there's going to be strength in the Canadian dollar. But when you look at the economies of various countries, the U.S. is still top dog. We have the strongest economy out there, and that's why there's strength in the dollar. So I have trouble really finding a reason. The hardcore inflationists say, well, the dollar is in such abundant supply that it can only fall. But the offset is that it's in infinite demand from this banking shell game that has aggregated to nominal sums approaching, or maybe even a little bit more than $2 quadrillion. So it's kind of a paradox that the world is awash in dollars, and yet it's so strong. But it's not dollars the dollars aren't being demanded and used for actual commerce. They're part of a much bigger financial game. The global economy is maybe 70 trillion plus large in terms of goods and services, but the financial economy is more than 10 times that big. So you could say that the real business of this world is no longer business, at least not in services and goods, but in financial products.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. You're listening to HowStreet.com radio. You can find us on Twitter at TalkDigitalNet or check out our popular YouTube channel, Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.